We were talking about Mitt Romney's tax problems on the show, and we'll probably keep talking about that because, as he told Brian Williams, he's not going to release the rest of the returns. The funny thing here that we touched on in the show is that there's been a lot of talk about Swiss bank accounts and foreign stuff, and that sets off all sorts of alarm bells. But the biggest tax sheltering option for him that he seems to have used has actually been right here at home, and that's using his retirement account to expand a fortune from, as I mentioned to Lawrence, from $30,000 a year, which is the maximum you can give under law, up to tens of millions of dollars, which is what, from the little that he has released, we know is in there. And there's been some really tremendous investigative reporting on this by Bloomberg News, among other publications, looking at how you would do that. You could take preferred shares of Bain or other companies that you had really special access to and stick them in there, and then maybe they would rise by 5 or 10 times. Even that wouldn't get you up to tens of millions. So it's funny that the biggest question here that raises really the most deep kind of controversy about both whether he used that to put in capital gains and shelter tax, or whether there's something more there that really we ought to know about before the election, relates to something that's very basic, which is retirement saving, except from what he's released so far, when Mitt Romney saves for retirement, it looks very different than what it looks like for most of us.